Okay, everybody. Well, even though I'm not feeling really up to it, my sense of duty is far too strong to not do a post-Powell overview. What I've done is I've gone through my entire ETF list, and I've plucked out 15 that I thought were worth a few words. And well, let's talk about them. These are in alphabetical order. Here's the diamonds. 13th day in a row going up. 13 days. That apparently is a record. It is matched only once before, I think back in early 1987. So yeah, if they do it again tomorrow, which seems completely plausible, as I'm recording this, everything's bright green, of course. That'll be an unprecedented move up. So won't that be great? So the diamonds are really close to a lifetime high. 358.74 is the highest ever recorded. We are just literally a few dollars away from that, not even 1 percentage point. EFA. This is the one and only ETF against which I have a position. I own puts, January puts on this. It's dangerously close to that pink line right there. It'd be awfully considerate if it would slip away from that. But there you go. You know, hanging on, 177 days left on those guys. Junior miners. Still bearish looking. This had broken below this trend line, went zipping higher, and it seems to be kind of giving up the ghost again a bit. So this looks like one of the cleaner ETF positions out there. IWM, still the biggest threat known to, not known to man, but known to bears. This is very, very close to completion. And should it cross above the peaks we saw here, back in mid-August and back on Groundhog Day, it's kind of all over at that point. I mean, the bulls have already had a dynamite year, but this will make it a, atomic bomb level of wonderfulness for the bulls. So getting quite close to that. And I didn't realize, but this Friday morning is a big economic data point in terms of the CPE, and that will strongly inform the market as well. So we'll see how that shakes out. So yeah, the IWM, quite key. IYT, huge update for the transports, up over 2.5%. I suppose, based on Boeing symbol BA had a very strong day, and I've got to believe that was really what flowed into here and made this such a powerful move. KBE, also super important. I did a post on this Wednesday morning, but this is the regional banks. And as you can see here, we had this enormous top, big fall, bullish pattern, we're pushing higher. We had a strong up day on this, up almost 4%. It is getting quite close to this massive overhead supply. Now, I would hasten to add that we also had a huge pattern here and crashed a little bit of a different situation. The crash here was prompted by the COVID crash, not really the entire financial structure of the universe. But this thing can certainly, in this instance, it approached that mass and retreated, and then ultimately just said screw you and just went blasting higher. But for the immediate moment, I do think that the zone, and I'll drag this out a bit to make it more clear, the zone beneath all that cluster of activity is pretty important to watch. That's worth keeping an eye on in terms of whether it'll reverse or not. The mid caps are bullish, just like most things right now, blasted right above that broken trend line a couple of weeks ago. S&P 100 very strong, up 1.75% today. OEF quite close to its own lifetime high of 221.01. Seems beyond belief, but there you have it. The cubes managed to be down a little bit today. Now I imagine with Meta's blowout earnings that probably will reverse tomorrow, but as of the normal cash close on Wednesday, the cube slipped 0.25%, but still safely above this Fibonacci retracement. Semiconductors, SMH, I suppose Texas Instruments helped drag this down. We've still got a failed bullish breakout here. Here's the price gap at 158.06. To just negate this, to completely negate it, all it has to do is slip above the high of the 18th right there, which is only about $6 away. I say only. It's a little bit of work, but it's $6 pop would completely neuter any value in that failure, but hasn't done it yet. Here's the big old spider. Same old, same old, same old. Big old inverted head and shoulders here, and just not a downtick in sight. Just the last even few days of weakness were late in June, but it just keeps sailing higher and higher and higher, and it's getting within spitting distance of its own lifetime high. 468.78. We're only $13 away from that, so that's what, about 3%, 3 measly percent to a lifetime high. TLT merits continued observation. A failure of 98.12, I think, would be a big warning bell in terms of rising interest rates, and I assume diminishment in equities, but that's, leave that for another day. It's just that would take some doing to cut through that green line. Energy stocks remain strong. These had been confined by the symmetric triangle, and it did its first bit of damage back on the 11th, retreated, but now it's just like leaving no stone unturned here. It's just blasted right above it. XLI, which is another industrial's lifetime high. No asterisk, no ifs, ands, or buts, lifetime high on the XLI. And you can see here how it had been in a diamond pattern, but that was just laid waste back on June 7 after it escaped that pattern. And speaking of diamonds, and we'll close with this, here's the XLU, utilities. This actually still looks possibly bearish. We've got a little shooting star on this today. It is below this high, so here we've got our peak, lower high, lower high, lower high, still in the diamond pattern. This one's still worth considering. And on that note, that's the end. So good luck on Thursday. See you then.